And I think, James Withall, CEO of Rupert Resources. The company made a significant discovery, this Ikkari discovery in Northern Finland, about 4 million ounces, 2.5 grams. Just keen to give you an update and let you know what's going on in these troublesome times in the markets.
Good stuff. Well, look, James, I appreciate you coming on. I want to kind of tap you up about how I, as an investor, should behave in times like this. And of course, yeah, thank you. We'll take the update as well. But what I want to do is see if there's any parallels I can draw from your behavior, former fund manager, current CEO, board member of, whatever, $800, $900 million company, and how I should think and behave about investing. So if you're okay, nervous retail investors out there, unsure of what to do, lots of requests for hand-holding, recommendations, advice, etc. And it's very, very difficult. So people are changing their behaviors, hoarding cash, and just waiting for this to bottom out or maybe go away. How has your behavior changed?
I think, well, I guess it hasn't changed an awful lot. And I think we're very cognizant of the market and obviously cognizant of what's going on around us. But at the same time, I think that the challenge I always had in my previous role is when you had times like this and companies did a knee-jerk reaction and made a change very quickly, or suddenly stopped spending on the project and put it on hold or whatever. Look, we're in a very fortunate position because we're not building the project right now, so we're not faced with the phoning up to order the next bit of equipment and it being 50% higher or just not being available, which I sympathise a lot with the guys that are actually building projects right now. But at the same time, so that gives us one advantage. But really, the key thing for me is always just to look at the companies and ask the question, do they have the cash resources? Do they have a reasonably good balance sheet going into it? We have $43 million right now. So that puts us in a position where we have control of our fate. Do we have flexibility in terms of timing? When we do things? Yes, we do. And we're still a relatively small company at this point in time. But underlying that, we have a very high quality asset. So those are the key things. So people, as an investor, why you invest in the first place? Is it because it had a really quality asset underpinning it, the company, or a good portfolio of quality assets underpinning the company? And that gives you comfort. And then is the company, committed? Do they have a long-term measured plan, systematic, a little bit boring, but ultimately, are they just carrying on delivering and doing what they set out to? Those are those are the immediate things I think of when people talk about that.
Right. Okay. But do you feel like, I guess you've got what, 40 plus million bucks cash at the moment. That gives you some optionality to come at this any which way you want. But do you still feel in control? Because again, everyone in the market, everyone's feeling just a little bit of frisson of nervousness, and we're slightly out of control. Do you still feel in control?
I do feel in control. Key things for us. If you look at the shareholder register for us, we have very long-term supportive shareholders that have been supporting this company from the very beginning, with a mandate to go and find large, high-quality, tier one or long-life assets. And we've managed to do that. Fortunately, we found our first one. Hopefully, there'll be more to find. But by having that support in a supportive shareholder group and that vision to only concentrate on finding things that are going to, once you found it, it doesn't disappear. It's going to be around for forever. Even the production life of that asset, even when we found it, it's going to be over 20 years. So you're trying to build a business with a much longer time frame than is going on with this market volatility right now. You're going to go through a few cycles like this. And I think by having that longer term view, it allows us to keep the focus rather than not get too distracted.
But there's also kind of all sorts of cliches out there, like, markets change, rocks don't, right? Really cute, really cute. But that doesn't make me feel less nervous when the market is like it is now. It's a tough time for everyone, across the board. So how do you've given us some clues about some of the things you believe that people should be looking at, so in terms of your company and maybe others that they're investing in. But how do we judge you? Because you're looking at raw data, you know how to interpret it. I'm waiting for a PEA for you guys to put out some numbers to kind of underwrite this valuation of yours, so I get a sense of what you've got, what it's going to cost, what you could make, and and some sort of NPV number on this thing to give us an idea of scale. So, is that really what I should be looking at? Am I correct in saying that, or is there more to it?
I think it's a very important point to be looking at, because you want to understand. If I was looking at the company myself, maybe step back. Well, you've been very successful. You found something. You've done. It looks really good, and you've put out these great drill hole intercepts. That all sounds great, but what does it really mean to me as the investor? And I guess, and you're right. It's very easy for me to sit here in my seat and say, because I see all the data. But what are the key things that sort of give me the comfort, probably? And maybe if I relay those, that give some comfort to the investors. So, we put out a resource last year, 4 million ounces. We found that quite quickly. Discovery cost us $5 an ounce. The market quickly revalued the company at like $150+ an ounce. Even today, wouldn't be far off those numbers. So, that's it's a credible return on investment. So we got that. So since then, yes, we've been putting out some nice drill results, and we've spoken quite a few times. But what do they really mean? We've said it in insurance. They give us more and more confidence in that resource. At the moment, it's all about building confidence. People find stuff, splashy drill results. But what happens when you really start drilling the thing? Does it fall apart? Does it get better? Does it just improve and accomplish it? We feel very confident in that resource, and we feel that we have engineers looking at it. They seem very confident in the underlying gold in the ground and its potential to have good economic value. So that's the main thing. We will then put the PEA numbers around that, which will give the market a sense of capital, a sense of the costs, ultimately strategy, and the sense that the life of it. And obviously, as we go through that process, we start to understand those things more and more. And we do think it's going to have a long life. It should have relatively low costs. It should, I think the capex shouldn't be too bad. Obviously, we're in a highly inflationary environment, but we're not building it today. So what will the environment be like in a few years' time when we're building it? Hopefully not the same environment that we're in today. It's important for us. What we're really achieving by doing this PEA is to validate that $150 an ounce value that the market's giving us today. And then we will hopefully, there'll be some points in there which will sow the seed of people thinking, well, could this should be a production asset, and then it will get revalued over time to $300 or $400 an ounce. So you're just trying to continue to de-risk and provide the information for people to have the comfort in value today and the fact that it could release a lot more value in the future.
Okay, so I think well understood. PEA is just a moment in time, a lot more work to do, but it gives you a sense at that early stage about the economics, right? I want to come back to this valuation component again. For me looking in, I can go and look at a bunch of peers. I can. Sometimes I'm going to get those peers right, and sometimes I'm going to get them wrong. But fundamentally, if I'm trying to find peers for you, I guess what I'm saying to myself is, do I think this company can survive an economic downturn and come out the other side? And if so, how has it performed relative to its peers, like strong companies? I mean, how do you come at it? I mean, is that a fair way of looking at you?
Yeah, I think so. You have to think about what you own today. Well, I guess I often looked at in a really bad case market, in a really terrible case, will this company be able to still achieve what they sort of set out to achieve? Is the underlying quality of the assets good enough to be able to achieve that? Yes, you might have to suffer a bit more dilution than you plan to in your equity that you need to raise to build the project, but that portion of it, but that shouldn't be so much that it's going to kill that investment. It's not going to write off that investment, and I think that's where people should look at with the PEA. What's the IRR on this thing? Don't look at everything else. Just look at the IRRs. And what sort of free cash flows does this thing generate, given a gold price over time? If you see what I mean, don't worry about the NPV. Is a terrible measure really, because it just discounts everything and it's very arbitrary. But just let's look at the annual free cash flow numbers that assets are going to develop in the future. that'll tell you whether it's going to survive, or that'll tell you whether it's a worthwhile investment today. So to take yourself away from, look at, the old adage reality is if in fund management, the best way to judge a company is not to look at the all-in sustaining costs or the amount of ounces it produced. Just look at the cash flow statement. Did they make money in the last quarter? Or did they make money in the last year? Have they made money over the last many years? Once you take away those financing flows where they might have raised more money every year, or once you net out all those things, did they consistently make money? And we think Ikkari is an asset that should be, as a production company ourselves or as part of someone else's portfolio, it will make money every year. So I probably didn't answer your question directly.
No, but I know what you're getting at. But for me, that's great in terms of a producer, but for an explorer developer, I'm just again wondering, what do I need to look at in saying, well, this is a tier 1 asset. This is in a tier 1 jurisdiction. This is a management team, I believe, that has got a good plan. They have got cash. I mean, again, what am I honing in on? Because with PEAs, clearly, which we've been talking about, the variables are vast. I always talk about plus or minus 30%, maybe it's plus or minus 40% in this kind of environment. And the technology side of things and the network isn't necessarily nailed down. So I'm looking for things like, simple processing, heap leach, lovely. I understand that. Simple, it's cheap. Open pit, I'm looking for. So what are we looking for with a company like yours?
I think you are looking for those exact things. Look at the assets, look at the properties of Ikkari. It's an open pit primarily. It's high grade. It's near the surface. It's in Finland, so I don't have a risk element that I think I'm not going to own the asset. The asset has said, that we found the gold. It's not going away. Will the company continue to own that asset? Yes, we believe so. So that's a big plus, being in a good country like that. And then, the metallurgy things, we put enough information out in the market. It's a very, very simple deposit in some ways. For a gold deposit, it's one of the simplest deposits I've ever looked at in my career. So it's that all those things give me comfort and should give the investors a bit more comfort. It's just, I think you mentioned it, just a simpler business than many other companies. This is a very complicated industry. People get very, it's very hard to understand when someone's drilling, a meter of high grade here and a meter of high grade there. Does this going to work when it's turned into a mine? I don't, I'll be honest, I've been doing this for 30 years. It's a very hard call to make, whether that thing will make money. But when you've got a big sort of dumb deposit, and I don't let the geologists hear that, but it's big, a sort of big dumb high grade deposit near surface, very continuous, it just makes things easier.
So what are the, no, I agree with all of that. You touched upon something in terms of chasing high grade veins at depth. It sounds sexy because the high grade is there, but there's a lot of dilution underground, and the average grade through all of that can come down, and the cost can go up. So there's lots of ways to fall over, for sure. But one of the other ways to fall over is something that you're not in control of, which is what's happening with the gold price at the moment. Unexpected. Most people say an environment like the economic environment like this one, gold should be outperforming. It's not doing that. Does that make you nervous?
Well, I guess I look at it slightly differently. It's doing pretty well. If I just own gold and not any equities, I would be feeling quite comfortable. Or if I had, gold's doing what it should do as a part of someone's portfolio. Yes, it's not going up, but that's not the point. It is outperforming everything else. I mean, it's, what is it, down 6% or something? I mean, really, we shouldn't be, that's in the current environment. If your portfolio this year was only down 6%, you'd be pretty happy, and then look, and that's in US dollars, and then look at it in euros, or in, depending on where your perspective is. If you look at it in euros, we're quite close to the highs. We did our resource estimate for the part of our deposit when I joined 2018, the year after I joined 2018, and we used 950 euros an ounce. It's 1,710 euros an ounce today, the gold price, and that's only 4 years later. So it's done incredibly well. And I think, yes, we're at this sort of peak inflation, maybe, but God knows whether we are at numbers right now. But the inflation's not going away. I think people are very scared about gold because people have raised interest rates and they're worried about, well, real rates, are they positive right now? I mean, they might be temporarily positive, but that assumes that inflation's entirely under control. And they're going to continue to, they're somehow going to be able to raise rates. But we know that can't really happen. So I feel I've never been a big caller of gold going to multiples of where it is today. I think it's a great currency and it continues to perform very well. And I think if you're in the space, it's no comfort, I guess. It's still down, but it's still it's doing quite well, and it could well do very much better coming out of this as well.
Okay, well, let's look at something else. Just coming from a slightly different perspective, what I'm trying to do is get a little bit of your cool, calm, collected approach to this and apply it to my investing, right? So you're trying to build something, a quality project. I think you referred to earlier. There's not that many big quality projects out there, right? There's been some M&A recently where, I think those that have managed to create something quite good have been bought up, and that's quite nice. As an investor, how do I classify what a quality project looks like? It's going with a little bit of old ground that you mentioned earlier there, but I just want to be really clear in my mind. So there aren't that many of them. So what makes it quality?
It's ultimately long life. It's got to go through multiple cycles. It's got to have a low cost base, and the jurisdiction is important, ideally, but you have to go where the best assets are. And ultimately, in this industry, there's almost very little point investing in the short life, smaller businesses, smaller assets. That's why we built our business model, is to find bigger things. We find small stuff all the time. Finding small stuff is easy, but to build a small mine is just as hard as to build a big mine. It's as simple as it is. You could build a mine with a 100-year life or a 10-year life. Most of them, the heartache is pretty much the same, and the risk. So it's about that long life, fundamentally low cost assets. That's pretty much it. That's as simple as it is. And that a lot of that comes down to what really drives that is the geology. It's is this a deposit that geologically people have a lot of confidence in? Does it look as though it will extend over time? Will they find other things around it over time? Is it, those are the key things. That's quite harder for an investor to look at, that geological aspect. But if you just stick with the longer life assets, relatively low cost, that's the main point.
But in terms of my portfolio construction, we just said there's not that many of them. So I can't have a whole portfolio full of quality assets because I don't know how many you think there are at any one moment in time. But there are a lot of the other projects, 10-year life of that doesn't sound too bad to me. It's a question of what that risk profile looks like. What's the chances of it actually working out economically, because it's going to have to work quite hard, quite quickly.
They're going to have to work quite hard, and they need to sort of, depending on the cycle that it occurs in, or that point of investor interest in the sector, it might do very well. And we often, you often look at those sort of less good assets, and you can go rent them for sure. That's not a bad way to do it. As an investor, I often used to, you'd have your positions that you might hold for a shorter time. And I'm sure there's some very oversold companies today that are ultimately making money, and that's probably there's a different market for that. But are they long-term core positions in a portfolio? Probably not. And this is the thing, we're trying to build a portfolio of quality assets. We found one for sure, so our portfolio is a bit small at the moment, but we're endeavouring to add to that. But if I look at it from an investor's portfolio, you should be able to find a number of those, and then there's always the market opportunities that come up in the meantime, in the shorter term, be there for sort of a 1 to 2 year time frame rather than a 10 to 20 or a 5 to 10 year time.
I kind of like that. I kind of like that idea of renting stock, which is just that little bit lower likelihood of success, because it tells you exactly what you need to know. You should be thinking, how do I get in and out of this? And by the way, greater fool theory applies folks, where the company's good enough to keep telling the story, and you're clever enough to get out before the point where people realize what this project is not. So, but
I had a CEO when I switched sides. He said, and I obviously work for a fund management firm. He said, so finally you're not going to rent the stocks anymore. You're going to actually get on board. And he used like a super tanker. He said, so you're not just going to put your containers on, like you're going to be the captain of the super tanker. And I said, well, yeah. Anyway, it'd be a learning experience, he said. But the key thing is to make sure that what you're driving is a good quality super tanker. So people because people will rent Rupert stock. They'll come and go. That's fine. That's
You need the liquidity, but I think what I've been picking up here is that it kind of makes sense to kind of identify one or two or three quality assets and get in them for the long term for the right reasons. Like you've thought about it, you've been honest with yourself, and it fits your investing criteria. The rest you rent.